Hi traders, so let's kick things off with this week's Technical Tuesdays as we usually do the dollar. Volatility's been quite low. The market's obviously in a wait and see mode until we can get these massive central bank meetings out of the way. In terms of what I'm seeing on the charts, we're seeing good dynamic support from the 21-day exponential moving average as price candle wick lows test it continuously. I think the risks going into this meeting are skewed hawkish for the Fed. I guess it depends whether the latest developments in Omicron shift them maybe slightly more dovish. However, initially we saw Jerome Powell seem to look right through it and wasn't too phased by it. Just above its upper trend line of the ascending channel, that's also providing a bit of support there to price. We've obviously got the round number at 96.2, which is helping. The RSI is just above this sort of channel that it formed range. It's just bouncing above the 55 level, keeping its head above that. In terms of targets, on the downside, I would look towards the 21-day exponential moving average and below there 95.5, as well as the 96 round number, which is basically where the 21-day exponential moving average is. On the upside, if we see a hawkish reaction to the meeting on Wednesday evening, 7 p.m. GMT time, then I think, just shy of 97, previous high here on the 24th of November would be a good target to eye up, as well as a tiny bit of resistance here at 96.5. So that would be the first initial target to clip. And then if it can show more strength, it'll go up to test those former highs. Apologies about my throat clearing this morning. As we move on to the EURUSD, we can see again, so it's making a series of lower highs, and it's got a bit of a, I'm just going to actually draw in a quick little pattern here. So if we draw that in, we can see there's a nice support line there, and then we've got a little bit of a downward trend line here. So that's a flat-sided descending channel, they call it in technical parlance. And that usually resolves to the downside as we see this sort of floor / support give way as sellers come in at successively lower highs and sell price down. So we'll have to watch that one. Targets wise, this 111.8 low would be my first target, or 112 would be my first target, and then below there would be this low. Further down from there, we start going towards 111.5, as we saw back here in April and around the 30th of March 2020. And then on the upside, if this is a fake, if we see a fake move and there's actually a hawkish reaction to the meeting, which I would say actually the risks are skewed towards, because most are expecting, a top up to PEP in some form or the other, inflation forecast to be below target, and sort of not too hawkish a rhetoric. So if one of those items actually does come out hawkish, we could see some bids into the euro, which could pierce that little downtrend line, get above the 21-day exponential moving average, which is at around 113.2, and potentially rally back up to close towards the 114 round number, which is just below that 50-day simple moving average. On GBPUSD, we've got a nice little mini channel, descending channel I drew in here. Price broke up through there, as well as above the lower trend line of the descending channel, the main descending channel, not the mini one. It broke up above there, but then got sold back down. Now prices formed a doji candle right on that upper trend line of the mini descending channel. The RSI has sort of touched the oversold boundary and turned back upwards. I think going into this meeting, it's probably going to be not a very reactionary event, as the market it's very widely held consensus that they're not expecting a hike. And I'd be very shocked to see the BOE decide to hike, given that they seem a far more patient committee and they see value in waiting for additional information, taking a patient stance. Targets wise, um, those former lows around 131.6 would be my first initial target on the downside if we were to see a bearish reaction to this meeting. Lower than that, we start to get down to 131, and then below there it's 135. We can see there is a bit of resistance here at around 131, as well as 135. On the upside, I would say the targets wise, I would be eyeing this 132.5 area round number. Above there, we've got the 133 round number, which coincides with the 21-day exponential moving average. Those would be my two targets on the upside. EURGBP is looking very interesting. We can see it had a move up above this 200-day SMA, as well as the upper trend line of the descending channel that it's been in for so long. The RSI again got up to the 65 level like it has in the past, but it's been sold back down, and now we're back below the 200-day SMA. As I say in the previous two charts, risk for me for Euro actually tilts slightly to the hawkish side, whereas on GBP, I would say that it's neutral to dovish. So we could actually see price rally through here again, maybe trigger some stops like it clearly did here, and push price higher. But whether it's sustained is the other question, or whether it's a temporary move that gets faded. Targets wise, I would look towards basically this 0.8588 area. We can see price with candles there. Also, there's a bit of resistance around there, just shy of that 0.86 level. On the downside, we've got the 0.85 round number, which coincides with the 21-day exponential moving average, and just below there, we've got the 50-day at around 0.848. So those would be my targets on the downside. Dollar yen, again, very subdued moves here, hovering around this 38.2 Fibonacci level. The RSI is back in the little channel here, and it's above that support level at 46. Price has bunched right up against its moving averages here. I think we do see a bullish move in dollar yen as a result of a hawkish Fed with the acceleration of the taper. I think that'll confirm the move, and I think we could see a move into 114, which is sort of midway of this little mini range here. And then if we see a more aggressive move, we can see it up to 114.5. On the downside, which I don't expect as the most likeliest outcome, I would look towards 113, and here we saw some support around 112.5. Moving on to the Aussie, it's tried to stage a bit of a rally as risk sentiment turned more optimistic. However, the 21-day exponential moving average has capped those gains, and the Aussie now is sort of on the defensive as the RSI also rolls over a bit here. It's in the middle of no man's land, so it's a bit difficult to get any directional information from that. It'll be, I think going into this meeting, as I said, risks are tilted to the hawkish side for the dollar. So we could actually see the Aussie sell off a bit lower. We're at 0.71 at the moment. Key support, as we can see, it goes back to here. And if it moves any lower, if it breaches that, we could see the 0.7 number in range again, eyed up. On the upside, if we were to see a positive move, I would say the sort of 0.72 area would be quite important. We saw price got up to about 0.718 and came back down, as well as the 21-day exponential moving average. So yeah, moving on to commodities, gold. Another interesting one as we go into the meeting. Will a hawkish Fed cause some headwinds for gold and apply pressure to the downside? Well, this 1775 support's obviously been quite important in the last couple of days and weeks. So I think if the market reacts hawkishly, I think gold is going to suffer a bit. And if it breaks through there, then 1750 gets opened up, and the RSI will most likely move slightly closer towards oversold territory. We've got a sort of bullish cross on the 50-day SMA crossed above the 200-day SMA, but it's so minor, it's so like little a gap that you can't really read too much into that, as price is still very bunched up. And the 21-day exponential moving average, as you can see, has been working quite nicely to cap those price highs as sellers came back in. So if we see a dovish reaction, I think 1.8 breaks and we start to move back into this sort of vacuum area between 1.8 and 1.830. That was major resistance previously. We did see price in mid-November actually break through there and get quite close to the 1.9 mark, but unfortunately they couldn't get any higher than the 1.880 level. Looking at oil, again, a bit directionless, following the path of Omicron, maybe getting a bit jumpy with regards to the tightening and the cautious tone taken in the UK, given it's a major economy. The RSI is sort of again in no man's land as price tries to decide its new direction. It's got some support, solid support here at the at the $73.50 mark, as well as the 200-day SMA. And then we've got some resistance in the form of the 21-day exponential moving average. So price being a bit squeezed there, but when it starts to narrow like this, especially oil, I'm expecting a large move one way or the other. Could a hawkish Fed potentially sour risk sentiment? Could we see some weakness there? Um, maybe, but Omicron still and OPEC's decisions around that are still the key driver for oil. I wanted to put an interesting chart up on your radar. This is Apple that we have here, and basically what I've done here is I've drawn in the Bollinger Bands, but I've put it at 3 standard deviations from the mean. So I've put in a 200-day simple moving average, the length of the period, as you can see there, 200, instead of the standard 20. And this to me is just looking very overstretched. So it's 3 standard deviations above. Basically, it's 200-day SMA. The RSI is also turning now lower out of overbought territory, and it could make a cross down on that line. And some like to use that as a trigger. Basically, we saw quite a big bearish candle yesterday as it hit the tops there at about $180. So yeah, looking very stretched. We know 2 standard deviations contains roughly around just shy of a 96% of all data, and 3 standard deviation obviously moves that up even more. So the theme, the idea here is a bit of a mean reversion on price having run a little bit too hard too quickly. Thanks. I hope you've enjoyed Technical Tuesdays today. We've got a very exciting week ahead of us, and keep on the ball out there, manage your risk, and enjoy. This is what we love as traders.